Michael, as I said, thanks very much for joining us at 54 Rand and 2 cents on Reunert and up 3 3/4% today. Market liking their results. They outperformed the JSE all share.
No, that's right, Bronwyn. The market did take kindly to the results, which I think were very good in this environment. Their normalised headline EPS number came out at about 4.95 cents, which puts them on a PE ratio of about 10.7, 10.9. And also their dividend creates a nice dividend yield for the company. And if you have a look at the company, certainly over the good sort of 8-9 years, they have a history of paying special dividends, and at the moment they're sitting on a cash of about 1.6 billion rand. So potentially there is a special dividend in the.
Have you got exposure to the stock?
We do in one portfolio, in one of our private client portfolios, and we do for one of the principal reasons is the dividend, and certainly investors have, as I said over the past, gained from the dividend.
Well, and more news out today. Africa's biggest media group, Naspers, is expecting to report an increase of up to 40% in first half core headline earnings per share. Now, shares in the group, which owns pay TV network DStv, gained over 3% on the news. Core headline earnings per share for the 6 months to September will rise by between 30 and 40% on the 476 cents reported last year. Earnings per share will gain between 55 and 65%. It is expensive, Naspers, but again, it's a good quality business.
No, there is no doubt it is a good quality business, and I think the acquisitions they've done are now starting to contribute meaningfully to the business. But the key point, it is expensive. So from an investment point of view, it's at fair value.
Dimension Data out with results earlier, and that stock rallying 6.5%, almost to R9.98 on the day. Again, probably looking relatively expensive. Khulekani Dlamini certainly saying he wouldn't be buying the stock at these levels. But what do you make of the business?
No, I would concur with that. We also think it's expensive. But yeah, they had a very good set of results, especially in this environment. And you did mention it earlier that their product mix has switched. So the strategy that they started 4 or 5 years ago, where they now had greater emphasis on the services business, is now starting to bear fruit. But a good set of results, as you mentioned. $600 million in cash on the balance sheet. The operating margin increased from that 2% to almost the 5% that Brett Dawson was talking about. So a good quality result. But as you mentioned, trading now on a PE north of 16 times, it is expensive. So would you be putting money into Dimension Data at these levels? I would say no. There is other value within the IT sector.
Where is that value within the IT sector? Give us a stock pick for our audience out there, Michael.
We've mentioned it before, Data Tech, which has a similar partner in Cisco to Dimension Data, but Data Tech is trading at a very low price earnings multiple. It is cash generative. It's got it's quality balance sheet. It's got a very healthy dividend yield.
What's your time period for Data Tech?
Certainly a year, 2 years from now, you're going to see some good value.
What kind of return are you anticipating?
Probably almost two and a half times the market's, almost excess 20-25% return.